people question it, they fight it. Ultimately, the better, leaner, smarter model always wins. It's just a better form of financial system. Every single transaction that anybody makes in Bitcoin is shared with everybody in the world. There is no false transactions. And that's what makes it also very secure. Millionaires and billionaires in the world, they make their money from real estate. However, over time, in the past couple of years, I've noticed a trend. I first purchased my first Bitcoin. Actually, just looked up this morning on June 30th, 2017. So it's been 7 years. And ever since I bought it, I started getting obsessed with learning more and more about it. And as the years went by, I started delving deeper and deeper and deeper, so much so that pretty much for the past 5 years, there hasn't been a day that I haven't spent time learning more and more about it. And why would I get obsessed with something? Because I really strongly believe that it is life-changing. And then we'll explain that today on today's episode, what it is, what it does, what everyone should care about it, and how it could be literally one of the most important things you could learn about. So super important episode for us.
Before we get started, do you think there's something about being an entrepreneur that predisposes you to be open-minded to the concept of Bitcoin? The reason I ask that is because the people that I know who are deep into the subject are all entrepreneurs.
It's the certain traits. I think being an early adopter definitely helps, which is what we are, especially with our show. We lean towards that. I think when we started the re-round of us starting this podcast over, we said that we're going to heavily focus on this early adopter technologies because that's a competitive advantage for lawyers to be ahead of the trend. So definitely being open-minded is one. Understand technology definitely helps. But ultimately, I think everybody could take advantage of everything that we'll be sharing today. Yeah, and let's just put a disclaimer. Everything that we share today is for educational information purposes only. It's not meant to be considered as financial advice. For me, again, as I shared with you, I spent hours and years of studying this stuff. It takes that much conviction to really take it to the next level and actually invest in it. So definitely do your own diligence. I hope this podcast episode will be the turning point for you to go invest the time to go dig even deeper. All right, so let's start off. 5 important takeaways. I've been compiling piles of notes about Bitcoin. And yesterday I went into ChatGPT, consolidated all that information. I also had a very deep thought about what am I going to share because I have so much to share. So I'm going to distill it down to these 5 main points. If you understand these 5 main points, you will have a huge advantage over the rest of the market. So number 1 is Bitcoin is the ultimate savings account. It's a savings account. It's not money. It's not currency. It's not anything else. It's a savings account. That's the way you got to treat Bitcoin. So what is Bitcoin? In very simple term, it's a decentralized monetary system. That's all it is. It's a monetary system. It's a way that's decentralized. All it means is it's not controlled by one entity or one person like a bank or the Fed. It's between 2 parties, between 2 different people to be able to trade value with each other. And usually this trading is not done on a micro transactional level. Typically, it's people that have Bitcoin and believe in Bitcoin. They're not using it for transactions, for day-to-day transactions. And I really strongly believe it will never be formed as a use of transactions. There could be other ones that we could talk about later potentially, but Bitcoin in itself is meant inherently as a savings account. It's a way for you to hold value in the monetary system. The elements of Bitcoin is, again, there's no middleman. So there's no bank, there's no payment processor, there's no financial system, there's no Fed to be able to issue it. So that means it's not governed by just a policy of the government saying we're going to go and print this out, which is great. Number 2, it's scarce and limited. There's only 21 Bitcoins, which is very, very, very important and very crucial and probably one of the most important reasons why Bitcoin is so valuable. There are scarce assets like real estate and things like that. Anything that's scarce and limited, usually over time as the adoption grows or there's more and more demand, well, on the bottom side is how much supply there is. Well, the supply is limited. There's only a finite amount. Right now, there's only 450 Bitcoins that are basically released publicly. That's basically inflated, which is very minimal compared to what's in the market. So it basically has a lower than 1% inflation rate, which is very, very low compared to the 10%, 50% of USD cash. Number 3 is it's transparent and has an inherent trust factors in it. That means every single transaction that anybody makes in Bitcoin is shared with everybody in the world. So it's the most true system of holding money. And that's the blockchain technology, that every time something happens, every time there's a transaction, everybody knows about it. And that's what makes it also very secure, is that there is no false transactions. Again, as soon as something happens, everybody knows. If there is such a thing as false transaction, then the other transaction will be able to say, and this one is not viable. And that's what makes it so amazing. And number 4 or 5, whatever number we're on, is it leads to financial freedom and sovereignty, because it takes the power away from institutions and the Fed and the government, and it gives it to people. And that's a very powerful transformation of where we're heading. Less government, more power into the hands of people. And that also allows cross-border transactions. So a lot of people make money and send them somewhere else. Well, you don't have to depend on ACH or wires, complicated systems. You could send money, millions of dollars within 10 minutes to anybody in any country without anybody trying to limit that. It allows people who don't have access to the bank to now get access to some form of transaction of value. And it basically opens up this new world of freedom and sovereignty that belongs to the people. And that is everything that I shared with you is very strong characteristics of the more optimized financial system that the world will over time eventually will adopt. And ultimately, it's just all it is technology. It's just a better form of financial system. And over time, there's always friction in the middle. Whenever a new change is brought about, people question it, they fight it. Ultimately, the better, leaner, smarter model always wins. Neil, any questions about that? Any of that sounds fishy or anything like that?
I get that part. I get this appeal that it's not bound by some central authority. It's not tied to a particular banking system or currency of a country. I get that part. Okay. The parts that I'm still unclear about is just exactly how it accrues value, and then ultimately how you extract the value back out. And then I have questions about the costs of a system such as this. And I freely admit I don't know what I'm talking about.
Great. So let's dig deeper. And I think your questions will become a little bit more clear. Number 2 is Bitcoin is the ultimate asset. And ultimately, you want to avoid altcoins. What are altcoins? Altcoins are these other coins that are trying to use the same technology, more or less the same technology as Bitcoin, with its own application. So such as, if you may have heard, Ethereum or XRP or these other gibberish names, those are anything outside of Bitcoin is basically considered as an alternative coin. And what I've seen in this space is that 99.9% of these altcoins are essentially super hyperinflated, and ultimately are gonna be worthless. And they're also very risky because the technology is important. However, it's also very easy to come and create these and release it. So it creates a lot of fake competitors, such as just the same way that there was the online companies. As soon as people discovered the world of selling some things online, then all these online companies were created, pets.com and all these different things. And ultimately, there was an ultimate bubble. And that's ultimately what's going to happen to all these other alternative coins, where these days there's literally hundreds and thousands of these different altcoins. Very risky play. And a good rule of thumb is to keep it safe, protect your asset, protect your money, and avoid altcoins as much as possible. There are some certain altcoins that could stand out, that could potentially do well. The top 1% of altcoins, I don't want to specifically name out particular ones because, it could be very risky. But just know the safest asset you can have is in Bitcoin. However, that also comes into understanding the perspective of when to buy Bitcoin and all these other assets. The entire price structure of Bitcoin is governed by a 4-year cycle. When Satoshi Nakamoto, who was the inventor of Bitcoin, when he created Bitcoin, he realized that the computer systems are going to get improved by Moore's law. So in order to combat the fast growth of the technology of these computers, he basically created a rule that basically said that every 4 years, the amount of Bitcoins that are released out to the world, we're going to cut it by half. Because if we don't, then the computer system is going to catch on to to basically mining these Bitcoins, and it's basically gonna get out of hand. So what that does is every 4 years, basically it cuts the inflation by half of these free Bitcoins that are being released out to the world. And what that does is that also controls how the price movement happens. I know this sounds vague and like, what are you talking about? Let me just give you the short gist of it. We're currently in our 4th Bitcoin cycle. And so far, history has shown that there's always, after the Bitcoin cycle, which was the last one was in April 2023, usually there is 2 years of run up after the cycle. That means it goes up after the cycle. Then greed kicks in. Then the prices really go up. Then at that point, once it becomes really, really overhyped and overpriced, then there's a year of basic consolidation. Price goes down. Then there's a year of essentially just staying stagnant. Then it goes through the cycle again, which is 2 years up, 1 year's down, 1 year's stagnant. 2 years up, 1 year's down, 1 year's going stagnant. And if you look at if you go on Google and you search for like Bitcoin price pictures from the beginning, you will see that there's a gradual step up every time that it goes through a cycle. First start off as a penny, then it was 10 cents, then it was $1, then $10, then 100, then 1,000, then 10,000, then 100,000, then eventually a million, then eventually 10 million. Every time it goes through this cycle, it basically goes through this adding on close to almost under the zero to the price. And that takes time. But so you got to have a long-term perspective when it comes to this. This is a 5 to 10 to 20, 30-year asset that only makes sense then. If you try to come into the market and you realize that the prices are coming down 10% here, 20% there, it's because you're looking at the wrong perspective of what this asset is. It's super volatile in the short term, but very consistently predictable to be going up over long term. So basically the easiest way to play it is to just acquire and hold on to it as a long-term savings account without being concerned about the short-term fluctuations that happen. For me, one thing that really helps a lot was about 5 years ago, I read Tony Robbins' book called Unshakable. Amazing financial freedom book. Highly recommend it. It's mostly in the realm of stocks and things like that. But there was a key principle that Tony Robbins shares in the book, and it's backed up by a lot of data that basically says long-term, the markets go up, essentially. Long-term, markets go up. And the best way to win is to just be in the market and not get shaken out by the short-term fluctuations. Okay, and that's applied usually for stocks. Bitcoin and crypto is epitome of this mindset. Be in, don't get shaken out, and play the long-term game. And that's my mindset. I don't get flustered or annoyed when prices go down because I know this is something that I'm holding on to for 5, 10 years, maybe possibly even keeping it for my children. But that time, as it goes through the cycles, it would go from 10,000 to 100,000, then 500,000, then a million, then it goes beyond that. And ultimately, it becomes a really simple game if you treat it as so you have the right mindset about it as a savings account that you only basically buy as a long-term asset.
I have a question. I've got questions. So, and forgive my ignorance, but is Bitcoin a category of investment opportunities, or is it a specific type? Like, is Bitcoin an example of a cryptocurrency, or is Bitcoin another word for cryptocurrency, and there's a variety of different types of Bitcoins?
Good question, Neil. The category is technically called crypto. Cryptocurrency is a little bit misleading because, again, it's not really a currency. Some of them are meant to be used as a currency, but just this is a misnomer. It's not a currency. So crypto is the category. And then in that realm, Bitcoin stands as the first and foremost and the most popular up to this date. Yeah. Right now, Ethereum is number 2. I believe one of my favorites, Solana, is number 5. All these other ones, number 2 through 10,000, always fluctuate over time. Again, the altcoins, the variance is very high, but Bitcoin has stayed true to be the long-term assets, long-term savings account, and no other crypto has been able to remove that.
Okay, so when you talk about a halving event, that Bitcoin every 4 years has this change, are they reducing the number of Bitcoins that are available on the market? And if so, how are they doing that?
So the way that the transactions get verified when I send money to you, Neil, is that there's these miners which are basically in charge of verifying that this transaction happened. And in order for them to actually go and spend the energy, literally the energy, for them to go and approve this transaction, they get a little reward in Bitcoin. An amount of Bitcoin that is rewarded to the entire system is right now 450 Bitcoins per day, which is in the grand scheme of things, that's not much at all. As we shared, it's less than 1% inflation, less than 1% that's entered into the system every year. So that number is halved every 4 years to keep up with how fast the computers are improving in the technology to be able to mine it at a faster rate. And that what that does is it basically limits and cuts the supply by half, essentially, the free supply by half. And over time, finite amount, more or less, with increasing demand. Well, it's economics 101, increasing demand divided by limited, super limited supply. All pure economics means just price goes up. Especially when you compare it to, let's just say, US dollars. Well, US dollars, the denominator is the supply of dollars. Well, in the past 5 years, there's been a 45% increase of that dollars. So it means literally in the past 5 years, our dollar is worth 45% less. It's just crazy. So every time there's more and more printing that happens, that means anything else in relation to dollars will go up, like stocks and real estate and bonds and et cetera, et cetera, et cetera. So essentially, it's just it's an asset class is the best way to look at it. And it's competing with the other asset class. Historically, stocks go up 10%, real estate goes up 10 to 15%. Historically, Bitcoin has been up 44% per year. So that's the competitors that it deals with.
Sure. Okay.
Speaking of which, point number 3 is the new investment strategy is moving from real estate to Bitcoin. Real estate to Bitcoin. Nobody talks about this. So one of the best asset classes in the world, hands down, bar none, is real estate. Most of the millionaires and billionaires in the world they make their money from real estate. I strongly believe in it. I strongly believe that real estate should be 1/3 of your assets, especially make sure that you buy your home. That's for sure. So let's just get that out of the way. However, over time, in the past couple of years, I've noticed a trend. And here's the trend. And a couple of years ago, Neil, I was thinking to myself, I'm like, the generation before me, people that are like very wealthy, I realized the commonality that they have is they got into real estate early. And I questioned it, and I'm like, well, they got their opportunity in real estate. I didn't. At that time, I didn't have money 34 years ago. What's my opportunity? I kept asking him, like, what's my opportunity? And over time, I realized the answer is technology. New things come to the space, using automations and softwares and tools, all these things, technology. So that was like my focus. And then all of a sudden I'm like, wait a minute, there's a financial monetary system that combines that with technology. And that's what Bitcoin is. And I realized, could this be the new opportunity for this generation? And the more that I studied that, I realized, yes, it is so. So it basically has the benefits of real estate, which is, again, long-term hold, long-term savings account without the downsides. Well, what are the downsides of real estate? Well, there's property taxes, there's maintenance, there's permits, there's literally millions of different taxes and different things pulling you a different way. And I've heard so many stories. My father-in-law deals with a lot of real estate. I hear the horror stories of like waiting for this permit and then this tenant did this happen. And I hear all the negative sides of real estate. And the real estate is supposed to be passive, but from what I've seen, unless if you got really, really good assets, over time it's become even more and more active. And it's not as easy as it sounds. And also it became so saturated and so competitive, especially depending on your market. Just in California, I forgot about making money in California. So over time, I realized you could either get into real estate, very active, a lot of pain, or you could just buy an asset, hold on to it, not do anything, nothing to worry about, just hold it for 5 years, and pretty much guarantee that you will make money. Based on this 4-year cycle, Neil, nobody has lost money from holding on to Bitcoin for 4 years. That's one of the coolest stats about Bitcoin. Nobody has lost money from holding on to Bitcoin in 4 years. And the reason is every time it goes through a cycle, it goes to the next tier. So if you look at every 4-year horizon, you take anywhere from 4 years, there's no point in this 4 years that's lower than the last 4 years. And it's really cool stat. So you can't go wrong with just buying it. Super simple game. Buy it, hold on to it. Much easier game than real estate for me. When the light bulbs went off for me a couple of years ago, I made a commitment to myself. I'm not a real estate expert. It's great. Maybe, definitely want to secure my home. I want to get that down. But outside of that, I don't want to play in the red ocean of this real estate game. people that are experts, that have been doing it for 30, 40 years, by all means, double down on it and go make more money. But for new people who are entering the market, I think the better, smarter way is this leaner, easier system called Bitcoin.
Yeah, I can see that. I would say that in between the real estate boom and this cryptocurrency or crypto phenomena was the explosion of the internet and the people who made a lot of money in that space. But that's just cocktail chatter.
All right, so let's go to point number 4. Very important mindset when it comes to winning in this market is don't try to time the market. It's all about your time in the market. So don't time the market, be in the market. A lot of people try to get stuck into the weeds. I'm waiting for the price to drop. I'm waiting for this to happen. It's very, very hard to predict. From what I've seen the past 7 years, nobody can predict where prices, what's going to happen short term. Impossible. And if anything, I've always been surprised, like how exact opposite. Everybody assumes it's this way and it always does the opposite. So I don't ever try to time it. I try to time it based on the 4-year market. So I have at this point, it's my 3rd cycle that I've been through. So God became a little bit more seasoned. So I always try to buy it before the halving, during the time when it's during the bear period, which is basically when it's completely dropped. That's when I get really greedy. Mindset is get greedy when other people are fearful. And then when times can become very greedy, then that's when I just hold back and I don't purchase anymore. So I haven't purchased anything since the halving cycle has happened last year. All I'm doing is just watching it. And I don't try to time it for the most part. I just try to just try to be in the market, and I try to just accumulate over time when I think over to long term is a good time to buy it. But I don't try to play these fluctuations. Oh, it went up and then try to sell it. And, oh, it went down. Let me try to buy more. Like, don't play the short term game. Just try to be in the market. And the most common mistake that I've seen in people investing in Bitcoin is FOMO, fear of missing out. Fortunately, we're humans and we're all very emotional creatures. And the way that we're built is that when things are bad, nobody wants to get involved. But when things go up and the prices go up, that's when people get interested. Well, unfortunately, that's the completely wrong strategy. You have to be a contrarian, that when things are really bad, that's when you really want to be greedy. And when things are really good, that's when you really want to be fearful. Neil, I have a funny rule of thumb for myself. I'm waiting, for me, I'm looking to possibly play the cycle. That means I'm possibly looking to sell some of my Bitcoin and I'm waiting, trying to create my triggers. When am I going to sell? So one of my triggers is when my mother-in-law asks me how she can buy Bitcoin, is when I'm selling my Bitcoin.
Yeah.
And when you see your Uber driver talking about Bitcoin, all that stuff, and you start seeing people that are like not really into it, all of a sudden they start asking about it and start buying it. That's when the smart people are usually selling it. So be very mindful. Again, be a contrarian. Play the opposite game. If everybody's hitting on something, that's probably a good time to get into it. When everybody's loving it, it's probably a good time to be selling it. So be very conscious of that.
Well, let me ask you some questions about the mechanics of this. Where are the markets? I mean, do I just Google where to buy Bitcoin and go from there? Or is there a central repository, which seems to be fly in the face of the whole idea behind the Bitcoin architecture? I'm not sure where it is, or where would I go to sell?
Good question, Neil. You're asking a very good question. These days, the easiest way to acquire Bitcoin is on an exchange, basically on a platform that allows you to buy and sell. Very popular exchanges like Coinbase is the most popular one. A bunch of other ones, a bunch of names are like
I have heard of Coinbase. I do.
Yeah, Coinbase is the most popular one, probably the most quote-unquote safest one to buy on. Yeah, Coinbase mobile app or your desktop. They make it very easy. You literally just connect your checking account and you're able to transfer money. And then from that, you're able to either place a limit order, which is what I do. A limit order just means that you just place an order up front, like before. Let's just say right now the price is 57,000 at the time we were recording this. So I say if Bitcoin gets to 52,000, then go ahead and buy this much Bitcoin. So that's a limit order. Or you could buy a limit order, which is basically is like whatever the market price is, which is 57,000, just buy at this price. Let me just give you some advanced tip. Usually market orders are more expensive than limit orders. So even if the price is 57,300 right now, so put a limit order for 57,200, you'll get a much lower transaction fees and be able to acquire it. I strongly believe in this. So I got my mom into this, I got my sister into this, place the limit orders, place it for them. If the price happens to spike down, they pick up some cheap Bitcoin, and usually that ends up being the right play. However,
Yeah, and your point about it being a long-term strategy and a buy and hold strategy, I mean, that rings pretty clear here, because it's not something that's, while it may be easy to get into, you're not buying $100 worth of stock. You're buying something a little more expensive now at a price that was going to go up based on results. So this has to be money that you intend to invest, that you're not going to be looking to extract to pay next month's rent.
yes, and that's actually a great transition to point number 5. Is you gotta manage your risks. And Neil, you made an amazing point, because as I shared with you earlier, it's a long-term hold. So you better not be investing any money that you need in the next 5 to 10 years.
Yeah.
It's completely a savings account. Let's just say you make a rule of thumb of $10,000 in my savings account, and an X percentage of my savings account gets parked over here that I'm not gonna touch, and I'm gonna check on this in 10 years and see what happens. That's the way you gotta treat it. Definitely do not invest anything that you need to be able to live, for sure. Again, we also mentioned manage your FOMO. Be very conscious of that. If you feel that feeling of fear of missing out, don't. Honestly, just the easiest thing is don't. And right now we're in that weird stage where we're about to enter the FOMO stage. We haven't hit it yet. Literally in the next couple of weeks, the next couple of months, and the next year, we're about to experience this, and it's gonna be fun watching it, Neil. Be very, very careful. Don't have that feeling. If you feel like that feeling, don't. Just the easiest thing is to don't enter the market. Maybe just wait for the next cycle to come in and you'll to pick up some up. Also, be very conscious of the tax consequences. If you buy and sell Bitcoin within a year, then it will be taxed as ordinary income. So if you're a trader, you're probably essentially giving away 40% of your gains by just trading. Instead, if you you buy it and sell a year or more later, then you're in the long-term capital gain tax category, which is much lower taxes, 20-25%. So that's the game that I play. No, much lower taxes. I understand that. And then just a couple of last pointers is, Mama said it's never too late to do the right thing. So hopefully this episode has been helpful for you to open up your mind to this. I'm going to just share some resources. My favorite resource by far is a channel called Invest Answers on YouTube. It's something that I've been watched every single video of his for 4 or 5 years. Really, really good. Invest Answers on YouTube. He also has a Patreon. It's like $10 a month. Well worth it. Once you get in there, every single day, there's posts, there's videos, there's tools, there's commentary thing that helps you get deeper and deeper into this. And then also Twitter is also another great source. There's a guy named Fred Krueger who's amazing. And just be very, very, very careful with the sources that you follow. If you follow these YouTube channels that are just hyping things up or talking about these altcoins, all that stuff, those are red flags. 90% of these YouTube channels are scams. They're trying to fool you into referral opportunities and things like that. Please be very careful. Be very conscious of the sources. The 2 sources that I gave you with investors on YouTube and Patreon are probably the safest, best bets. I hope that was insightful. I hope that was helpful. Again, I really strongly believe that it's life-changing. Again, I think the future of all of our financial wealth depends on this. When the government is spending more and more money and inflation is growing, you don't want to be holding on to dollars. You want to have hard assets like Bitcoin and real estate and stocks. Make sure to study these things. And if there's any questions or anything like that that come up about this, please let us know instead of a community called Lawyer Club. I'm obsessed with this. I could talk about this all day long, but if you want to follow the discussion, continue there.
Well, it's certainly been an education for me, Sam, so I do appreciate that.
All right. Thank you so much. We'll see you in the next episode.